Hello everybody, and a very happy Friday to you all, and welcome back to another Taurex live trading session on this Friday afternoon. I appreciate that it's fairly late on a Friday and some people are probably shutting off for the weekend, and I will be after this stream, but I wanted to come on and just give you just a quick wrap up of some of the trades that we placed in the week, and basically just give some clarity on some of the ideas. I put an update in the Discord channel, so I want to talk through that with you. I appreciate that there might not be people joining necessarily live, but hopefully if you are watching on catch up, we can go through that. So because I'm streaming at this sort of time at the moment, I just wanted to basically on a Friday, my plan is to basically go through my trading journal, because one of my 2025 goals was to make myself more accountable for the trades I do, especially now I'm in this role, which is very busy, busier than when I was at my previous job, still being an analyst. And I'm going to talk about something today which I nearly slipped into, which if I wasn't journaling my trades and wasn't making myself accountable, I probably would have made a mistake. Now, the irony is that mistake would have been a winner, and sometimes that's even harder to take. And it was a proper realization check for me. Sorry, I didn't mean to knock the mic. A proper realization check for me. So that's really what I wanted to touch on today and just wrap up the week a little bit. So I'm not necessarily, if I'm being honest, going to be trading now for the rest of today. We had some data out of China today, and as you can see there, it was basically their economic growth figures. You can see that the forecast was for 5%, previous was 4.6%. The actual gross domestic product figure in China was 5.4%, and that's fed into a really positive risk sentiment to end the week, which ties in nicely with one of the trade ideas that I put on the stream yesterday. Bobby, you'll know about that, and hello to you. Thank you very much for tuning in. I know it's late on a Friday potentially for you, or you're maybe wrapping up for the week, so I appreciate you coming on to join as always. Retail sales in the UK came in weaker as well, which didn't really help the pound bull scenario that we looked at yesterday. So the three things I want to go through today are, well, first of all, we'll look at the pound versus Japanese yen analysis and why I decided not to place the trade. And then we're going to look at the Nasdaq analysis, because it was very much a unlucky corner. Trade went in my direction, but didn't tag me into the idea, which is annoying, but it happens. And the third one will be having a look at the trading journal, just to make sure we can wrap up the week and say we followed the rules and we followed the process. I've found just personally doing that is the most powerful thing you can do in trading. So I try not to think of the profits or the results from trading. What I focus on is the process. So as long as I'm getting my process right, the results from my experience should follow in some way. So I am basically taking all of the fun and emotion out of trading. Well, emotion, I still find it enjoyable, but I'm taking all the emotion out of it and having a look at just following the process. So when I said about the China data that came out and how that fed into this positive risk sentiment, I'm on the Nasdaq chart now, and Bobby, you'll probably know this from earlier that we had a potential idea that was shaping up. No, sorry, that's the wrong chart. That's the S&P 500. But I could give you an update on that as well, because I actually had a buy limit trade on the S&P 500, which I've now deleted. And the reason I've deleted it is because, as you can see, my idea was to go long from 5,750, and we never got there. And people always think there's a reason why it just didn't go there. It didn't get into my area. I thought we would tag into that order block. I was looking for a liquidity grab below this low. We did get that. And as you can see, people would have been trapped into selling here. And as always, the stock market just burn sellers for too long, sellers that sell for too long. So what I'm going to do is I'm going to go, right, scrap that, get rid of that. We've got a clean chart, and we'll do some more analysis on that next week. As it stands at the moment, well, you can see that we're breaking out above. Okay. So maybe next week we can look for something like that. We'll see. Now, when it comes to the NASDAQ, very much unlucky. So I had this buy limit in. I actually placed it late last night. That was commitment. And I was using the 50% of this fair value gap. I thought that this was a little bit of a accumulation, manipulation, distribution play. As you can see, the manipulation came at this low. I don't know why I'm shouting. And this low. It's probably because it's Friday and I'm excited. Both below these lows. Okay, so we can see that happened, and then we moved higher. And my trade idea on the stream yesterday, and it was a trade I placed myself. Actually, it's a trade I've still got. Can you see that? Oh, no, you probably won't be able to see that, will you? Because see that buy limit? I'm going to delete that. And the reason I'm going to delete that is because what I was looking for is a move down to the 50% of this FVG and then a move higher. However, sometimes what happens when you trade FVGs, and it's a little bit of a lesson, is that sometimes we don't get to the 50%. So we're trying to maximize our risk reward there. Because if I'd have placed it here at the open of this FVG, the risk reward was then only a 2-to-1 trade, and it wasn't really worth it. That made it a 3 or 3.5-to-1 trade, which made it a bit more worth it for me. Just the way that I done it. It didn't quite work out, but I got the direction initially right. Now, don't fall into the trap of, once you get a situation where your area of support or your order block or, I don't know, your moving average or your whatever entry criteria you use as a support or resistance zone, from experience, I always say to myself that if we do get that area which has been mitigated, i.e. it's already been tested, and then we see a reaction, I wouldn't then wait for another test of it to go higher. It's just something I've learned over the last year or so, is that sometimes what I would do is I would miss the trade, right, because I didn't enter this FEG, and then I'll try and set another buy limit there, hoping that it comes and tests it once more. Once the area's already been mitigated, I find that more often than not, if the market or the price comes back down to that level, then we're probably it's probably going to go further down. So I think that now it's been tested, as you can see there, I'm not really too interested in getting involved again. So again, it's a trade that I missed the boat on. Both of these trades, the S&P 500 and the NASDAQ, I got the direction right. Look, you can see my alert set there and my US 500 alert set there. And as a trader, that happens a lot. And what's really important is that we don't get bogged down by that. In fact, I'm happy I got the analysis right. These markets are going nowhere. We'll get opportunities. We've already got some fantastic trades that or at least one fantastic trade which is currently live. So I have absolutely no hesitation and no. I've learned not to worry about analysis or trades that don't get tagged in and go in your direction. There's nothing you can do about it. As I've always said, the markets will do what it likes. Once you place that trade, place that order, you're powerless to what the market's going to do. And it's not necessarily a bad thing, because let the market have the power when you place the trade. So out of that one, no NASDAQ trade for me, no S&P 500 trade for me. But we have got a gold trade still live, which is running well. And this is where I want to talk about a trap I nearly fell into. I promised myself when I started to trade again this year, and I looked back at some of the mistakes I made in the previous year, I said to myself, right, where did I make the mistakes? And what happened was I got excited when I got too emotional when I was in a winning trade, and I was trying to scale into the trade to sort of hit a home run, should we call it. And although sometimes that works, and there's nothing wrong with necessarily scaling into a trade, but sometimes, and more often than not, what it does is it throws you from your original or your initial entry criteria, and you start going off on a tangent. You start entering here and entering there, and all it does is feed that sort of desire in your brain to trade and overtrade. And before you know it, you're placing trades on a 1 minute and 5 minute time frame, no real entry criteria, and you're just trying to follow structure, or you're just trying to follow momentum. I nearly done that today, And the ironic thing is that it actually worked out. So what I was looking to do is, obviously now we're in this gold trade, which is working really nicely. I was saying to myself, when we had this move lower, that I was looking for a little bit of basically a re-entry at this demand zone. So I was looking for a re-entry there. And there wouldn't have been anything really wrong with that, right? There wouldn't have been anything wrong with that. And then what I started to do is I started to go down to the lower time frames, and I started to say, right, okay, so now we've hit that 1 hour zone. Could we? Let me just delete that. Could we get another trade here? And this is perfect, by the way, analysis on a lower time frame. There's nothing wrong with the analysis. It's just not how I trade anymore, and therefore I shouldn't go back to it. I haven't got time to be doing this. So there's the liquidity on this low on the 1 minute time frame. There's the initial move higher, and basically what I was going to do was buy here. Even though we didn't actually get the 50% tag of this FVG, I was going to buy here. And if I did, you can see the results I would have had, right? So it's very easy for me to, get frustrated about that and think about what could have been for today. But actually, I'm very happy that I didn't do it. And I know it sounds really weird because I've gone down that road before, and more often than not, it ends up in you being burnt unless you're a very experienced 1 minute and 5 minute trader. All that would do is just feed my brain into thinking I can do that all the time, and that would not be the case. So I didn't place that, and I just really wanted to just, let you know that for some reason, is that if you've got a plan and you've got like a particular time frame that you trade, don't deviate from the plan. Keep the plan as it is. So let me just get back to where it was. So I'm going to delete that. Okay. And the gold trade's still running, and it's running really nicely. And I'm hoping that next week, now we've had that sort of wider breakout, we can get a move up towards 2790, and that would be a really fantastic 10.5 to 1 risk reward trade. And I showed you earlier on my MetaTrader that I am still in this trade. Now, when it comes to the trading journal, my trades for January, they still remain the same. So I've got the oil trade, which has been fully closed. Here I'll take profit, made 4% on that trade. That's the only trade that I've closed this year. The gold trade is one that's still open, so I haven't updated the profit and loss yet because I'm going to wait for that trade to fully close. And obviously the other trades like the pound versus the Japanese yen, which I'll talk about, and the NASDAQ trade, etc. If I have a buy or sell limit that doesn't get tagged, then I just delete the. I don't fill it into the journals. There's no point. And yeah, so that's overall looking at my P&L for January is 4% profit, and yeah, it's been a decent start to the year with only one trade as well. So you don't have to. I promise you, in trading, less is more, and I never thought that would be true with trading because everyone wants more, but actually doing less is giving you more. It sounds weird, but that's the case. Okay, right. So the pound versus the Japanese yen. Yeah, as you can see, I didn't place this trade mainly because we had such a horrible daily close yesterday, like down here. Yeah, sure thing. Bobby, I'll put that in the Discord channel for you, and people can copy that. No worries. I just got a couple of formulas to do on it, and then I'm going to, if anyone wants to use it, then they can. So people will probably be screaming, like, why didn't you place that trade? Like, it's the trade's running well. Sometimes trading is just personal preference as well. So I made a decision, an emotionless decision, that I didn't like the daily close yesterday. And then when I saw the retail sales in the UK a lot lower, I thought, On top of that, next week we've got the Bank of Japan, and I'm hearing rumours that there may be an interest rate hike, and that feeds into more pound Japanese yen downside. It doesn't mean it's going to fall. I'm just saying that from a fundamental standpoint, it's not. It's given me the opposite of what the technicals are telling me, and I like to trade when I've got all my ducks in a row, sort of thing. So, I mean, if you did get into this trade, the analysis was great. We had bullish divergence. We had a clean order block. We had a liquidity grab, and we were targeting the top of this liquidity as a 6.89 to 1. And if you are in this trade, you are in a bit of profit. And I hope people are in the trade, and I'm really not that fussed that I'm not in it, because I've got a good gold trade running, and I made that decision myself not to trade it, and that's fine. But if you are in that trade, Bobby, if you're in that trade, I know you like pound versus Japanese yen. You know, there's nothing wrong with the analysis. I'm not trying to put you off. It's just these live streams. I've just decided that I'm just going to be honest about what I do, and I'm not telling you what to do. I'm giving you the analysis. If you want to execute on that analysis, that's fine. If you don't, again, that's fine. I'm just telling you what I'm doing on my trading account. If people want to laugh at me and say it's rubbish, then that's fine. But yeah, the analysis is looking good, Bobby, and I wish you all the best in that trade. And technically, it looks good. And I tell you what, if you drop that down onto the hourly time frame, over the last few hours, you've had a really nice sort of bullish engulfing candle, which is looking like we could be breaking higher here. So actually, yeah, maybe I clearly made a mistake not getting in, but I'm not too fussed. I'm not, to be honest. So next week, guys who are watching, we've got the Trump inauguration on Tuesday. I'm not sure what's going to happen with the markets. I think I'm a little bit nervous about that. It depends if Trump comes out and he's like, ultra bullish and saying all these things, which doesn't surprise me. The markets could move quite a lot. And we've also got a Bank of Japan interest rate decision, I think tentative on Friday. So yeah, it should be a good week next week, and I'll be back on Monday to break down the top events and opportunities of the week. I'll continue to let my gold trade run throughout this week, and then we'll look for new opportunities on Monday. So all the charts, and this is how I like to do things, all the charts that I analysed this week, I managed to get the gold trade on. 2 of the trades that I had went in my direction and didn't tag me in, so I've deleted the analysis, and then we'll go again on Monday. Okay, that just leads me to wish everyone a fantastic weekend. Thank you very much for another great week in the markets, and thank you for your support in the Discord channel, etc. We've got some more exciting things to come, and the signals will be coming in as well. When there is a signal, you should be able to see that in there. Take care, trade well, have a fantastic weekend, and I'll see you soon.